Moving abroad, at a recent event, Federal Reserve Chairman Jerome Powell stated that the strong U.S. economy allows for a cautious approach to interest rate cuts. He noted that there is no immediate need for reductions, citing robust growth and a resilient labor market despite a dip in job growth in October, while U.S. inflation is also trending toward the Fed's 2% target. Moreover, it is worth noting that, like other risk-sensitive currencies, the rand often takes cues from global drives such as U.S. monetary policy, in addition to local economic indicators. Let's hear more from Federal Chair Powell.
Inflation is running much closer to our 2% goal, but it's not there yet, and we are committed to finishing the job. With labor market conditions in rough balance and inflation expectations well anchored, I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. Given progress toward our inflation goal and the cooling of labor market conditions, last week my Federal Open Market Committee colleagues and I took another step in reducing the degree of policy restraint by lowering our policy interest rate by a 0.25 percentage point. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. We're moving policy over time to a more normal setting, but the path for getting there is not preset. In considering additional adjustments to the target range for the federal funds rate, we will carefully assess incoming data, the evolving outlook, and the balance of risks. The economy is not sending any signals that we need to be in a hurry to lower rates.